TV cycles with the weekend update on May the 18th. So although I warned about some possible downside or panic previous week, it was panic buying instead. And if you have seen my videos over a time, you will have noticed that after a correction, I have said that the first 5 weeks you should not expect any big pullbacks. It's very often to get into the market because you never get a dip to buy, and I certainly did not think we would get such a 5-week rally, but we did, because in the bull markets you're almost guaranteed to have those, but when the market gets bearish, the rallies often last shorter. But it was a 5-week rally, and that doesn't mean it has to end here, but we have kind of reached the minimum target of length, but the rally could be even longer. But now we are halfway in a 10-week oscillation, so we could see we shouldn't lose momentum. So last time I talked about a possible inverted cycle or 2 merging cycles, but that certainly was not the case. The 2-week oscillation low is this small dip here, and currently it's very difficult to spot where the next 2-week oscillation low may be. And this time again, I think this looks like you could call it an inverted cycle or 2 merging cycles. So very possible. My cycle is a little bit bullish this coming week, mostly sideways, and then it turns down. So we did get this rally above the 200-day moving average. I was kind of suspecting that the market would do that, really testing the bears, staying above the 200-day moving average, and making a lot of people bullish. And then we'll have to see, is it for real or is it fake? Because I think something like this is my primary scenario. I still don't believe in this rally, but we have to see about this next 10-week oscillation low. Where is it? Because in a bullish market we should maybe do something like this. We have too much momentum, we have to make some topping formation and then some sideways consolidation, maybe ending up around the 200-day moving average, and then we have continuation to the upside. Because if you saw my video yesterday, I talked about I still think this is a bear market bounce, almost a double top, so I call it the double top scenario, and we should turn down. But if we consolidate and go to all-time high, and I could see this ABC continuation of the bull market, but still I don't quite believe in this rally, because if you look at some historical analogs, we have like here 1976 bear market. It was not a terrible bear market, but here you see kind of a double top. Now this is trading days. A double top around the same timing, but this first correction was of course not as deep as the current one. So there are similarities, there are differences. Here we see the 10-week oscillation, so we made a low somewhere here, and then we have a new one. Although it looks like a higher low, we couldn't rally up and establish an uptrend, so it was a lower high and more downtrend. Then we have 1981, again similar formation, almost a double top, but of course our correction is much deeper. So there are possible similarities and differences. Again, we have the 10-week oscillation making a higher low, but then a lower top, and then the downtrend is getting established. We have 2007. Again, there are similarities, there are differences. Here actually we made a higher high. Then we have the 10-week oscillation making kind of a double low. But then we have a lower high and we are establishing the downtrend. We have 2015. Again, some things are similar, some things are different. Here we have a 10-week oscillation low making a higher low, but then we cannot break out. We are making a topping formation and then we get downtrend. Also we have 2022, Ukraine war started here. You see, this is very similar, although our correction is a bit deeper. Topped out in both. So far we are a little bit more than 3% above the 200-day moving average, and yeah. So I could see a possible bearish scenario play out, something like this. So around here is the 200-day moving average. We could break below, but not crashing down around mid-June here, and then around mid-July we cannot break above the 200-day moving average, and there is some tariff stuff going on, isn't it, in July? 90 days after mid-April, that gets us into mid-July, so maybe it's related to that, but this could be a possible bearish scenario. But if we start doing something more bullish than this, consolidating sideways, not seeing real weakness, and then starting to want to break out to all-time highs, yeah, well then I have to give up this bearish scenario, and maybe it's the top in the fall or after the summer sometime. But we are seeing signs that the 10-week oscillation is starting to top out, and we have to see on Monday, this Moody's rating news, will it affect markets or not? I don't know, I have no idea. I could also mention from VIX, I have the 10-week oscillation projection from the VIX. So in using bull market rules, I would expect another, say, 2 weeks before topping out, but we should start seeing topping formation here, losing momentum. But then if I make an average of bearish scenarios, from bear markets, we are pretty much at the point where the bear market rally should end. And the 10-week oscillation should top out, and then we should go down. So if we switch to the hourly data for Dow Jones Industrial, yeah, looks like a bearish setup here, especially if we have an expectation of some kind of a gap down on Monday. It would look like it's definitely, then it would look like, or anyway it looks like a selling setup. But we are not quite following the 2-week oscillation, as I mentioned to begin with. We are seeing some, 2 cycles merging into one, and then you can call it an inversion or whatever. So it looks like it's more like this we could be doing, but it's not necessary we just crash down from here. With this momentum I would maybe expect some sideways topping formation, and then we could go down. So here we are end of May, and here we are, well, I don't remember the dates, but yeah. Momentum, we are getting overbought, the Dow Jones Industrial, and we are starting to get possible selling signals here, and yeah, that should give us some kind of a pullback. So yeah, so these two, something like this. Either we consolidate bullish sideways, downgraded US debt has no impact, could be, or we do see selling into mid-June and maybe breaking below the 200-day moving average, and everything does not look that great anymore. We have to wait and see you later.